STR shareholders, they outperform Bitcoin. So if Bitcoin does 20% over the long time term, they would do 30, we would expect, or 40, right? And right now, say Bitcoin it did 40% a year for the past 5.5 years, and our common stock is 60% a year. From $100 down to $1, down to 80 cents, 60 cents, 50 cents, 48 cents, 46 cents, 42 cents. And we were, 3 days from bankruptcy, failing. So, that's, by the way, that's like, calculate that's like 99.8% drawdown. When you're ready to depart this earth, when you die, you can take the money with you too. If you have your private keys, you can literally take your private keys with you and you can take it to the grave with you. That is a property right that is absolute and profound and unique in the history of humanity.
Still watching your portfolio swing 20% and not knowing whether to buy, hold, or get out? You're not alone. Most people in crypto are just reacting. Very few are actually reading the market. This channel is for the ones who want to read it. Bitcoin, macro, on-chain data, institutional moves. We cover what actually drives price. Sharp analysis, no noise. If you're serious about this market, subscribe and turn on notifications. You don't want to miss what's coming. Michael Saylor just told you to sell your kidney before you sell your Bitcoin. And before you write that off as a meme, that's the man who has spent $62 billion of other people's money buying Bitcoin. That's the man who took a software company 3 days from bankruptcy and turned it into the world's largest corporate Bitcoin holder. He's not performing. He means it. What you're about to watch is one of the most dense, most unfiltered Saylor interviews we've seen in a while, and we pulled the sharpest cuts so you're not sitting through an hour of small talk. Here's what's in this video. Saylor walks you through the actual math behind why Bitcoin isn't just better than gold or the dollar. It's infinitely better. Not figuratively, mathematically. He uses half-life equations and thermodynamics to show you why every other asset you've ever owned is leaking value, and Bitcoin is the only closed system ever invented. Then he makes the humanitarian case, not the investor case. The case for why someone in Argentina, in Nigeria, in Germany in 1923 needs Bitcoin more than you do. And why every piece of physical property you own, your house, your gold, your savings, you hold at the pleasure of someone more powerful than you. Bitcoin is the first time in 100,000 years that's ever not been true. And then he lays out the endgame. Not vague optimism, specific numbers. A price ladder that goes to $8 million per coin. A $300 trillion credit market he's planning to power from Bitcoin. And a company he's building to last hundreds of years. This is not a hype video. This is a man explaining, in his own words, exactly what he's doing and why he'll never stop. Pay attention.
If you live in Africa, there's not a single currency that works, that holds its value, and the banks don't work very well. So if you're the Uber driver in Africa and someone wants to give you $50, if they give you $50 of BTC, it's going to appreciate probably 20, 30%, 30% a year against the US dollar. And when your local currency loses 10% a year against the US dollar, if you give that, when your currency is collapsing 20% a year, the half-life of your money is 3 years. So whatever I gave you is worthless in 10 years. So if you want to store economic energy, you have to get out of that collapsing system. You can't buy any currency in a collapsing system. You can't buy a credit instrument or a bond in a collapsing system. You can't buy the real estate either, because the real estate is a derivative of the currency. And if no one's got any money in a collapsing economy, they won't be able to pay the rent, and the real estate won't have that much value. So you see this hyperinflation. It's come to Brazil. It's come to Argentina about once every 25 years. Every single currency in Africa has collapsed. The German currency collapsed a couple of times. Most currencies collapse. The most successful currency in the last 100 years is the US dollar. the US dollar has lost 99.9% of its value over the 100 years. And that's the best one. Okay. An acre of land in Miami Beach used to cost $10,000. The same acre of land costs $10 million today, maybe $20 million. So if you do the math, that's north of 7% collapse a year. And by the way, 7% doesn't sound that bad, but when you compound it over 100 years, and I tell you, you're going to start with $1,000 and you're going to end with $1. That's the best it's going to get. Now, if that's the best it gets, imagine what it's like when you lose the wars, right? In Japan, and Germany, they lost the war. In those cases, it's not 99.9% in 100 years. It's 99.9% in 30 years or 20 years. So how do you get off that sinking ship? You have to find a trustworthy bank. Well, there isn't a bank you can trust when the economy collapses. You have to find a trustworthy form of money. Well, the only form of money that's going to hold its value is scarce money. And so what you buy, you know what they bought in the Renaissance? They bought gold and they bought paintings. But then you better be able to get the paintings and the gold out of the country and try to walk through the airport with a lot of gold or a lot of paintings, and maybe you'll get allowed and maybe you won't. So the problem with physical assets as a store of value is that you hold them at the pleasure of someone more powerful than you. Everything you own in the physical world, you own at the pleasure of someone more powerful than you. And if they decide that they don't like you because of your race or your religion, or because you have more money than them, or because you say something they don't like, or you're politically different than them, they just take all your stuff away. And that is the story of history. 10,000 years, 10,000 examples, right? Thousands and thousands and thousands of examples, Muslims being disenfranchised, Jews being disenfranchised, the Christians, the Protestants being disenfranchised by the Catholics being disenfranchised by the Protestants. Every place, everywhere, the minority finds that their property is seized at some point. So the issue really is, where are you going to put your money? And the answer is you put it in cyberspace, a bank in cyberspace that's controlled by nobody, that's owned by nobody, that no government can stop, that no politician can interfere with, that no company can corrupt, and that offers you money that's scarce, that 21 million coins, 100 million satoshis a coin. You buy what you want. When it's time to leave, you take your money with you. When you exit the country, when you exit the city, when you exit the state, you can have it with a custodian, but when you don't trust the custodian, you give it to a different custodian. When you don't trust anybody on earth, you take self-custody. And when you're ready to depart this earth, when you die, you can take the money with you too. If you have your private keys, you can literally take your private keys with you, and you can take it to the grave with you. That is a property right that is absolute and profound and unique in the history of humanity. You've never had that economic right, not in 100,000 years, not in any place, not at any time, not with any other strategy. Every other economic right is a privilege you hold at the pleasure of the ruling class of wherever you live. And when they decide to remove that privilege, you will be impoverished. And I won't go into the details. I say read history. The more history you read, the more examples you will read of that having happened to somebody. And so, I see Bitcoin as that lifeboat. It's available to anybody, anywhere, right? For the first time in history. And that's what makes it so inspirational. Our endgame, we're like a reserve bank. We have a reserve asset, Bitcoin. So we've accumulated $60-70 billion of Bitcoin. We will sell credit. We are stripping the performance and the risk off of the Bitcoin. Bitcoin's got 40 vol and it's got high performance, but most of the world wants 0 vol. They want a bank account that pays them 10 or 11%. They don't want a roller coaster where they're pulling G's and throwing up that pays them 40%, but they have to wait a decade.
You said the market is 100 times bigger for people who want the 10% a year versus the 40% that is volatile, right?
Yeah. So what if you walk down the street and ask 100 people, what do you want? Do you want to work hard for a decade and be rich at the end of the day? That's like being a doctor, right? Do you want to go to med school and work hard for nothing for a decade and stay up all night and stress out that you're going to flunk out, but then at the end of 10 years, you'll be comfortable? Or do you just want to be comfortable now? And most people, they want the bank account that pays them at 10%. They want to live happily ever after, or another way to say it is they want to compound their wealth comfortably. If you want to be more aggressive, it's like, okay, well, give me the 10% and I'll lever it up 3 to 1 and I'll get 25% yield, like in DeFi. But I want to preserve my principal. And the general idea is people, if they have a certain amount of wealth, they don't want to risk it all in order to make more. They want to put it to work in a responsible way, and they want to comfortably compound their wealth. They want to manage it. And so our end game is to create that digital credit. For every dollar of equity capital of Bitcoin that we have, we call it digital capital. For every dollar of digital capital, you can create 10 to 20 cents of credit. And so we will, we've sold about $10 billion of credit. We've created 10 plus billion dollars of digital credit. We'll create $20 billion of digital credit over the next year or more. Then we'll grow that 30 to 50% a year. So 20 billion to 40 billion to 60 billion to 80 billion. And what's the long term? And so say we have $1 trillion of Bitcoin, of capital. Well, we can have 200 billion to 400 billion dollars of credit, and that then pays a fraction, 10% yield of the performance of the capital. Long term, the capital should be going up 20% a year, and then the credit could be paying 10%. And so what we're doing is we're creating this digital credit, and that becomes the basis, the fuel of the money economy, of digital money, digital yield, DeFi, TradFi. How big is the market for 10% return of capital dividends on an investment grade credit instrument? There's $300 trillion of credit. And that $300 trillion of credit gives you after tax about 350 basis points. So what if I could give you 3 times that much? Okay, so is there $30 trillion market there? Yeah, the addressable market is trillions and trillions of dollars. So our end game is create that credit and we strip away the risk. We're stripping the currency risk. We're stripping the economic risk. We're stripping the volatility. We're distilling the yield, compressing the duration. And we're handing people that want to invest their capital and credit this very low volatility, call it like a digital money market fund for people that trust digital assets and believe in digital capital, right? And then because we're doing that, that creates amplification for the equity. So our common shareholders, MSTR shareholders, they outperform Bitcoin. So if Bitcoin does 20% over the long time term, they would do 30, we would expect, or 40, right? And right now, say Bitcoin it did 40% a year for the past 5.5 years, and our common stock is 60% a year. So we give amplified Bitcoin to the equity holders. We give damped, low-risk Bitcoin with cash flows to the creditors. And then because we're actually raising that money, we're the biggest buyer of Bitcoin. So we're powering up the Bitcoin network. And if you're a capital investor in Bitcoin, well, the Bitcoin price was 10,000 when we started. It's 80,000 now. There's $1 trillion of wealth that's been created. We're not the only actor, but we're an actor. So our job is to power up the Bitcoin network and keep driving that network. And I think we'll buy it at 100,000. We'll buy it at 200,000. We'll buy it at 500,000. We'll buy it at $1 million, 2 million, 4 million, 8 million. So it's a very simple business, which is just dry Bitcoin to millions of dollars, expand the capital network to $100 trillion, hundreds of trillions of dollars, create trillions of dollars of digital credit, and then create a lot of money for our common stock shareholders. Our STRC is a preferred stock. It's targeted to trade around $100, between $99 and $100. It's senior to the common stock, so it has liquidation preferences. And the companies, it is a preferred stock with about $8.5 billion outstanding and an enterprise that has $85 billion of enterprise value. So you could think of the senior 10% of the enterprise is Stretch. And the mission of Stretch is to pay a monthly dividend such that it trades around 100. And so right now that variable monthly rate is 11.5%. We pay that each month. There's like 95 cents or something, 90 something cents last month. It's a return of capital dividend. And what that means is that when you receive the dividend, you reduce your basis in the investment by the amount of the dividend. So if we pay you $10 in dividends on a $100 share, you reduce your basis to $90, but you pay no tax. And then the next year you reduce it to $80 and you pay no tax. And after 10 years of $10 a year, you would reduce it to $0. At that point, it would become a qualified dividend distribution. So you would start paying long-term capital gains tax on it. But the way to think of it is it's tax-deferred fixed income. And the company uses all of its resources to strip the volatility to make it trade pretty close to $100. If it trades below $99, we'll raise the dividend or we'll raise capital or we'll do something to get it back to 100. And when it trades at $100, we sell that security in order to raise capital. So we wouldn't sell it at 99 cents, $99.99. We won't sell it. But at $100.01, we sell it to the market in order to allow other people to access it without overpaying. We never want someone to pay more than $100.01 for it. And, you could think of it as it's like a digital money market-like instrument. It's not a pure money market. It's a little bit riskier. It's a little bit more volatile than a money market, but it is a stable instrument and it's designed to generate 3 times, the performance of a money market for people that believe in digital assets. And it's the most tax efficient credit instrument that you can buy, because if you buy bonds, you pay ordinary income. Yeah, you have to pay 40%, 50% tax on a corporate bond. If you bought a bank preferred stock, it's qualified dividend distribution. You'd pay long-term capital gains tax at the federal and the state level. But with Stretch, you get these 2 big advantages for generational wealth. One advantage is when you buy a $100 share, you get $100 of dividends tax deferred, and you can reinvest them and it compounds. And then if you pass the share to your heir, if you give it to your daughter or you give it to your son, in your will, they get a step up in the basis to $100 and they collect another $100 worth of dividends tax deferred. So your family might very well collect dividends for 20 years, all tax deferred, which you can reinvest. And you can't do that with a bond and you can't do that with a normal preferred stock. And so it's a very interesting way to preserve wealth. If you don't want to see your principal fluctuate, you don't like volatility, and you aren't really pleased with the bank providing you with 0 or a money market where you get like 2% after tax.
So my mom has her $500,000 in savings, and she sees I can make 10% a year, 50K. That's amazing. Should she invest her entire 500K savings into STRC?
I think allocation's a decision that everybody has to make, and it all comes down to, how comfortable are you with the risk you're assuming? So probably the answer is not. Probably not overnight. You wouldn't want to. A Bitcoin maximalist, a person that's got a lot of money in Bitcoin and they believe in Bitcoin, they might very well prefer to put most of their working capital, the money they need in the next 4 years, they might put that into STRC or digital credit because they're a Bitcoin maximalist. The average investor would probably say, I want to have my investments across, 2, 3, 4 different sources of credit. And I really just think it depends upon, what's your time horizon and how comfortable are you with Bitcoin. And you have to trust Bitcoin and you have to trust the issuer.
So let's put that together. Saylor's been saying the same thing since 2020. Bitcoin is the only closed monetary system ever built. Every other asset you own loses energy. The dollar loses 7% a year. Gold loses 2% a year. Bitcoin loses 0. And when you divide 72 by 0, you get infinity. That's not a metaphor. That's the math.
And the people pushing back on that thesis, the ones who said he was reckless, the ones who showed up every time the price dropped to remind you he was wrong, those people are still getting paid in a currency with a 10-year half-life.
Here's what matters for you right now.
Saylor is buying at 100K, he'll buy at 200K, he'll buy at 500K, at $1 million, at $2 million, at $4 million, at $8 million. That's not a prediction. That's the stated operating plan of a company with $62 billion on the line. He's also building a credit instrument, STRC, that pays 11.5% monthly, defers your taxes for up to a decade, and passes to your heirs with a stepped-up basis. Whether that's right for your situation is your call to make. But the structure is real, the yield is real, and it exists because of Bitcoin.
The thesis is simple. The dollar is a melting ice cube. Bitcoin is the only hard stop in the history of money, and strategy is building a $300 trillion credit machine on top of it. You don't have to agree with all of it, but you do have to understand it. Because the people who do are not waiting for permission. If this video gave you something to think about, subscribe. We go deep on the people and ideas reshaping how money works. New video dropping soon.